हेलो। Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the era of AFM, that is Accounting and Financial Management. Acha, everyone, an important point. Today, I'll be conducting a specific marathon that is actually related to specifically Module D. So, kindly be there. In this particular marathon, I'll be covering the MCQs portions and the regular class of regular topic of Module D, which includes taxes. That includes direct and indirect tax. Along with that, it will also cover the area of direct and indirect tax, and it will also cover the area of costing, right? So we'll be covering all these things in our class today. So let's talk about it. This would be in the marathon. Today, this is a regular class, which is I'm covering in the area of revision series, right? So let's start with the first question today. Acha, this question is directly taken from the area of BRS, everyone. If the bank balance as per cash book differs from the appearing in the current account statement, then the balance considered for finalizing the account is of what? What would it include, everyone? Adjusted cash book before any adjustments, or when we talk about it, it's the passbook or not taken to the final accounts in case of the difference in the balance. What would be your answer? Chale. Now let's discuss the question. When we talk about the bank balance as per cash book means the value that is specified in the cash book. Cash book has two columns, cash account as well as the bank account column. So in the bank account column, when we talk about it, it differs from the appearing on the current account statement. It is definitely having a difference there. The difference is because of what part? It is basically when we are having any kind of errors in this area, है ना? So in this case, what are we covering up? We will be covering up it in the form of the adjusted cash book balance. We are going to find out the cash book adjustments. Adjusted cash book will include all the things but except three specific. There are overall three specific things that we will not include. What are those? Number one, it will not include cash deposited. Sorry, this is check deposited but not paid. Then comes the area of check deposit but not cleared there. I can say this is cleared. That's a better term. Then check issued. Okay, but not cleared again. And errors of passbook. We know about all the errors, but we do not know about these three errors only. Rest everything is known to us. So in this case, we will not cover any of this in the adjusted cash book area. Chaliye, let's continue further, everyone. Okay, this case, Mrs. Bhaskaran and company drew a bill of 6,000 on Mr. Patel. Acha, now there are two people there. One is Mr. Bhaskaran and one is Mr. Patel. Two people altogether. This is the one who issues the bill. He, according to him, it's a bills receivable. According to P, it's a bills payable. He's supposed to pay. And when he's supposed to pay, he's obviously stressed with that. So this person has a liability and this person has an asset. Right? Their asset and liabilities are all defined. So what will we do with this? So in this case, what can we do about it? One is an asset and one is a liability. Now, the party which draws the bill is called drawer. Then in case of bills payable, it's a drawee. One is the drawer, one is the drawee. So Messrs. Bhaskar and Company, a 3-month bill is for 6,000 rupees on Messrs. Patel and Company. He has drawn a 3-month bill. Bills receivable are all always for a period of 3 months. So on 1/1/2010, payable to Messrs. Sundaran and Company or bearer, here the pay will be Bhaskar and Company, Patel and Company, Surendra and Company, or all of the above. When we talk about specific this area, this particular person is drawer, this person is drawee, and the one to whom the payment will be made, who will be decided by the drawer, will be called the payer. Sorry, that will be called, yes, the to whom they are paying. Payer is the person who's paying, so this is P, and to whom he will pay, that is becoming the payee. In this case, one thing is sorted. Mr. Bhaskaran has not specified to whom he has to pay. Payable to Mr. Sundaran and Company. That means it will either be paid to Mr. Sundaran or the person who will be holding the bill, not any specific person. Isn't it? In this case, who will be the pay? That will be Sundaran or the bearer. The one who pays is called payer. The one who receives is called payee. The one who draws the bill is called drawer. The one who receives the money is drawee. Done, everyone? That's the second question. Now let's move on to the next one. Chaliye. The next question says, expenses incurred to retain the title of building. We are trying to retain the title of a building. That means we might have been fighting for it. That means it is a revenue expenditure, capital expenditure, deferred revenue, or none. Revenue expenditure are for the daily expenses. Capital expenditure is for assets when we are trying to purchase an asset or a liability. And deferred revenue is the one when we are delaying something. We did our part, but then we are delaying it. So what would it be? See, this is a regular thing. We are just retaining the title. Maybe someone would have sued us. Legal expenses are going on. That is called a revenue expenditure. Okay? This is not something which we are trying to acquire. If I'm trying to acquire land and I pay registration fees, then it would be covered in the area of capital expenditure. Reason? We are trying to acquire that particular thing, right? So in that case, that would be the value. Next point. What is the primary purpose of share capital account in the books of accounts? What is the basic reason that we are preparing the primary books of accounts? To track the market price of the shares, to record the purchase and sale of shares, to track the nominal value of the shares, or to record the company's expenses. Of the shares or to record. Okay. So what would be the answer in this case? When we talk about the primary purpose of the share capital, see, why do we raise share capital? The basic reason that we have a share capital is to bring the business um, to existence, right? First of all, you bring share capital, you run down the business, and then you make assets out of it. That's the basic purpose of it. What is the primary purpose of share capital account? This capital account is prepared to track the issued price of that particular account. So in this case, it is not to track the market price of the company. Market price is just to know what exactly the value is in there in the market. It has nothing to do with what you are investing in. So in this case, the correct answer would be to track the nominal value of the shares issued. Okay, everyone, in terms of shares, we have something called the area of share capital can be defined into the following types. First is authorized capital. That is what we get permission for, also called nominal capital, also called registered capital. Then we issue a part of it, authorized, then we issue it to the public. Then they take it, that is subscribed. After authorized, issued, subscribed, and when we take a part of it, subscribed, then it comes out to be paid up. And if a part of it is still outstanding, we will call the paid up capital as something which can be the area of calls in arrears, which is pending, and calls in advance. Calls in arrears is when it is pending from our side, and calls in advance can be stated as something which we have received in advance. It's a liability for us. This one's a liability because we have to pay it off. When we call it arrears, arrears are something which are outstanding. We are supposed to pay it. What is the accounting treatment for the forfeiture of shares? The share capital is reduced, the share capital remains unchanged, the share capital is increased, the share capital is transferred to the reserves. What would be the answer, everyone? What is the accounting treatment for forfeiture? When we talk about accounting treatment of share forfeiture, forfeiture means someone has given us shares. We tried to ask them ki you make the payment. The person is not making a payment. So what we do is we forfeit their share. Forfeiture means we are asking the particular person to not pay us. We are asking the person to pay us and then he's not making a payment at all. So forfeit means removing his name from the shareholder list. Right? We are removing his name from the shareholder list. So what do we do there? What is the accounting treatment for forfeiture? The share capital is reduced, the share capital remains unchanged, or the share capital is increased or it is transferred. See, it is not increased because we thought we are getting 10 lakh rupees and we are having less than that. So what are we going to do? It does not remain unchanged even, and it is not transferred to reserves even. It is basically the share capital is reduced due to this. That is 10 lakh. In this case, it would be reduced further and we will get a specific amount there. The share capital is reduced. That means whatever our subscribed capital would be, from the subscribed capital, we will remove this portion. Next point. Okay. Which of the following method of repayment is in terms of debt? The serial number is wrong there. In case of repayment of debt, acha, let's talk about it. First of all, if I have to make the payment for a debt, I can make it in such a way that it should be equal money or quarterly installment plus accumulated interest. B is equated money quarterly installment covering both the principal and interest, bullet or balloon repayment, or all of the above. When we are looking at it, which of the following is a method? Overall, equal money is basically when we are paying an EMI, which includes the principal as well as interest. Then equated money or the quarterly money. This is for principal as well as interest both paid, or you can just look forward towards this installment. Along with that, you will pay the interest separately. You know? And last is bullet or balloon repayment. Bullet or balloon means you are making the repayment in advance. Then when we talk about it, it turns out to be all of the above. Done, everyone? Chaliye, let's move further. Next question. Why do we create a sinking fund, everyone? What's the reason behind creating a sinking fund? We would create a sinking fund so that we do not face any problems in payments, right? Nobody wants to face repayment issues. Everybody wants that whenever we are making repayment, then there is no issue with that, right? Then for sinking fund means you are keeping the money separate for whatever the reason may be, whatever reason is coming up, and we are keeping the money separate for that particular thing. When we talk about sinking fund is basically you put money into it every single day so that we can receive the money later on. For example, if I after 10 years I want to buy something, so for that I need money right now. So sinking fund is created for that. When there is a need for specified amount of money at a specified future date, when the profit of an enterprise is more than requirements, as it is mandatory to take care of the future working capital needs. When we talk about the sinking fund is required for one particular thing. That means this particular fund is required so that the organization can take care of their future needs properly, right? The future needs can be they would need 10 lakh rupees, 15 lakh rupees after a certain period of time. So at that point of time, taking a lot of money out of the business will not be smart. So it's better that we start saving a certain amount every single year and put it in the market and earn from the market and then reinvest here. So in this case, what would be the answer? It would be when there is a need of a specified amount of money at a specified date in future. So you know this, that after this particular period of time that we will introduce it more and more. You know? What happens when a company issues a share at a price lower than the face value? It is called a right issue, or it is called the excess is recorded as CR. The excess is recorded in the profit and loss account. It is not allowed as per company law. As per company law, in terms of the one that we are looking forward to right now is when we talk about 2013. Before that it was allowed. After that it wasn't allowed anymore. So in this case, they have made sure that we are not allowed to issue the shares at a discount. It is prohibited now. But as per the scenario, if I talk about it in terms of the present scenario, what I can say is you can issue at a premium. We can issue it at the face value, but not at discount. Okay? So it is not allowed under company law. Which of the following is not a type of preference share, everyone? There are different types of preference shares. Which one among the following is not a type of preference shares? Cumulative preference share, non-cumulative, redeemable, or equity? Which of the following is not a type of preference share? Okay, preference share are of many types. Let's talk about the types as well. When we talk about the one in which it's all about the dividend. If we talk about dividend, if we face a loss and profit. If we face a loss in a specific year, what will happen? If we face a loss, we do not get the dividend in that particular year. Then if we make a profit, we get the dividend in that particular year. If the company is unable to pay dividend this year because of less profit, so what do they do? They will give you dividend in the next year. So what will happen is D1, D2, D3. For some reason they couldn't give D1. Non-cumulative means you can never be given the amount. For this, if the first year is gone, it's gone. We are paying it on D2 and D3, we will continue doing it. Second is, if we are not able to pay D1, we will give you D1 plus D2 plus D3. We'll keep on giving you money. This is a preference share under which we define that we will give you shares in the upcoming future. Not right now, but yes, in the upcoming future, we will give you the dividend for that. Always remember, in terms of preference share, we have a right. We have a specific right to receive dividend. It's not something that is mandatory for the company. Okay? So cumulative means to collect or accumulate the dividend. Then we have it on the basis of redemption, that is redeemable and irredeemable. Redeemable preference share means the ones which we are redeeming, for which we are making the payment. Payment of preference share is there accordingly, and equity preference shares are those preference shares under which actually there is nothing called equity preference. Preference shares cannot be mixed with equity at all. Redeemable means that we will have to pay after a period of max 20 years. Okay, na? So this is what is happening in this era. Now the next point that arises is the next point that arises in this era is that when we talk about the era of the preference shares, it does not include equity preference. Equity is a separate kind of share and preference is a separate kind of share. Under this, they do not work in this manner. So equity preference share is nothing. Done? Other than this, the preference shares are of many other types as well. One is cumulative, non-cumulative. Then is redeemable. In our country, we issue only redeemable. Then there is something called irredeemable, in which you do not pay. Then we have participative, the one which gets a right over surplus amount. Participative, and the second one would be non-participative. Okay? One is participative, the next one is non-participative. That means they do not have this particular right of getting the shares in such a way. Chali. Let's move on to the next question then. Okay. This is a question from compound interest. A student purchased a computer obtaining a loan on simple interest. He has taken the loan on simple interest. The computer costed 60,000. The interest rate is 12% per annum. First is, if the loan is to be paid back after 2 years, calculate the total amount to be paid after 2 years. Okay? What would be the amount that we will be paying? It is your principal multiplied by rate multiplied by time. This will give us the simple interest, everyone. When we talk about it, it is going to be 60,000 multiplied by 12% multiplied by time is 2 years. So what is the simple interest in this case? It is actually 14,400 rupees. Now this is your interest. And they are asking about the amount. So it would be amount is equal to principal plus interest. That would be 60,000 plus 14,400 giving me an amount of 74,400. So that turns out to be 74,400 is the amount. Acha, how is the simple interest and compound interest varying, everyone? Based upon this, how can we say it? In terms of interest, amount is equal to principal plus interest. This is the first point. When we talk about this area, interest is basically simple interest formula was P into R into T upon 100. The formula for compound interest is P 1 plus R raised to power n. है ना? We have this principle 1 plus R raised to power the time. So in this case, these are the formulas that we are using in the business, SI and CI. And pata hai, then when we talk about the discounting now, that is in the area of discounting, we follow P 1 plus R raised to power n area only. Done? So in this case, these are the... Okay, so what next are we talking about? Achha, next is this specific question says Mohan invested 5,000 in a company in an FD with interest of 9.8%. How much interest would be earned in 2 years? वैसे तो as such when we talk about banks ना, they whenever they are using FD portion ना, FDs are always in terms of compound interest. This question they should specify it. So I'm just specifying it that what if this question is of simple interest and let's solve it as per compound interest as well. What would be the difference there? If I'm using 5,000 multiplied by 9.8% multiplied by 2 years, what are we getting in this case? It is getting 5,000 multiplied by 9.8% into 2. It is rupees 980. And in the second case, what will it be? That is 5,000 multiplied by 1 plus 9.8% and then we have square. This is for compound interest. It turns out to be 1 plus 9.8% into equal to, that gives 1.20 multiplied by 5,000, giving us an amount of rupees 6028, while in this case we are making 5980. Can we say the simple, let me just write it here, it is rupees 5980. Can we say that the compound interest is more than the simple interest? This is the amount as per compound interest and this is the amount as per simple interest. Done, everyone? The amount in this area is more than the other area. The simple interest is more than that of compound interest. Okay, so that's it for the day, everyone. Now let's look at our website for further details. Let's move on and check out our website now. When we talk about our area, go on to the area of Adda 24/7 there. As soon as you reach on to the website, that is www.adda247.com. In this area, you will go on to the area of JAIIB October 2023. You will find all the sessions regarding the same. Currently, double validity is going on. Revision series is going on in terms of the Mahapacks batch, which is going on right now, which includes all the subjects and you can prepare all of them through this. And currently, double validity is also available. You can use the coupon exam 80. We have got 348 mock tests, 627 video lectures in this, which includes bilingual as well as the English medium. Then we have 252 ebooks in it, and along with that we have got 600 hours of live classes. So you can go through it in our website or in our app for further details, everyone. So keep learning and keep growing, and please be there in the particular session of the special module today, and don't forget to share this particular session if you find it useful. Thank you so much, everyone. We'll be meeting in the next class now.